By the end of today's video, you should be on your way to having a strong trading psychology. It's been a while since I last dropped a video on here on YouTube. I actually took a bit of rest, which also helped me prepare to bring you this amazing video, as so many of you guys have requested me to make a video that seeks to address our mindset or our trading psychology. Trust me, I also have made so many mistakes because my emotions were actually tied to my money. But there's so many grave errors whilst trading when I started my journey, until I decided to actually build my psychology. Because you can actually be amazing at analyzing the market, but if your mindset is not right, you realize that you are not able to build that consistency you need as a trader. So in today's video, I'll be sharing with you 5 amazing techniques I used to build my trading psychology to the level it is on now. If you're in my channel, if you're in my community, I'm sure you've noticed that we've been on an extremely crazy winning streak for the last couple of months. So in today's video, I'll be sharing with you the 5 trades I actually practice that enabled me to build my psychology to the level it is now, to hold trades through drawdowns, to be able to come out of losing trades, to manage trades in whatever situation it might be on the market. So if you like how that sounds, I need you to just give me a thumbs up, like this video. If you're new to this channel, please make sure you subscribe to this channel. If you are a returning subscriber, please and please again, I need you to also like this video, hit the notification bell so you get notified anytime I go live or anytime I share a new video. You to also leave your comments. So as retail traders, I'm sure I'm not the only one who has actually faced this. Anytime you take a trade, you lose big when you lose, and then you win small when you actually win because your psychology is not intact. The very first tool you need to have in place if you want to build a strong trading psychology is your risk management. Even the most experienced traders can experience significant setbacks, so it is very crucial, it is very important to manage risk. How much you're actually expecting to lose, how much you're trying to risk on every trading position you take. There's no point where you should take any trade without knowing how much you're actually risking on that particular trading position. You might be very experienced, you might be very good at reading the chart and analyzing the market, but you might lose all your capital because you actually take on too much risk. So it is very, very crucial you know how much you're risking on every single trading position you take. It is the best way you can actually control your emotions, because regardless of the direction the market is going, you know how much you're risking on it, so it doesn't really matter. And the one thing I also want you guys to understand is that you also need to minimize your risk. If I say minimizing risk, it basically means that just using profits from previous trades to minimize your risk. It means that if I take a trade and I make $10 on that particular trade, if I'm taking another trade the next day, what I'm risking is that $10. At this particular point, I'm actually touching the profits I made from the previous trade. And I've shared with you guys so many times my main risk management tool, Cashback Forex. I've shared this with you guys so many times. So once I come to Cashback Forex, I simply come to tools, then I simply come to what? Lot size calculator. So lot size calculator is basically what helps you decide whatever you want to risk on this trade by simply using the lot size. You can choose to risk in amount of money or percentages. So I can now decide to what? Risk 5% of this particular account of mine, which is what? A $10,000 account. 25 pips stop loss. All I need to do next is just hit calculate, and it tells me that if I use 2 lots as my lot size and I set the stop loss 25 pips away, if it goes against me, all I'll lose is 5%. And there's also the profit calculator in here. If you know how much you're risking, you also know how much you're trying to make on that particular trade. Your mind is mostly at ease, regardless of what the market actually throws at you. The next thing you also want to look at is backtesting your strategy. Backtesting is a very, 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 very important tool with regards to enhancing your trading psychology. When we talk of backtesting, let's say you're using support and resistance. Basically, you go back in time, you start playing back, marking up each and every new resistance at the support level you find. How does the market react on that particular key level with regards to your entry criteria? What happens when the market gets there? How many times does the market go into drawdowns? When you have an extremely efficient backtesting tool, what it actually ends up doing for you is that it actually takes out the emotions from your decision making, because now you know the pair really, really, really well. As you might know, I've been trading gold for the past 2 months. 3 months prior, 4 months, 5 months, 6 months prior, I actually took my time to backtest gold. I understand exactly how gold works. The reason why I understand how it works is because I backtested it with every single tool I have in my arsenal. So now if I'm in any trade and it's going into drawdowns, I do not panic. If I know it is a losing trade, I'll just exit that particular trading position. If you have been in my channel for all this while, you know anytime I'm spotting any trend change or directional change in any trade and I feel it's going to actually go in a different direction, I actually ask everyone to exit. And the moment I find a perfect opportunity to actually re-enter, I ask everyone to jump in again. Then we jump in, we make our profits, then we continue with our day. So all of this is tied to trading psychology. If you want to understand how to do effective backtesting, just go back and watch my video on backtesting. It will be the best backtesting video you've actually watched in your life. Go back, watch this video. It will help you understand how to exploit and then get the best out of every single trading strategy you use. Third tool I wanted to have in your arsenal, which I have in mind, is learning how to come out of losing trades. A bad trade is a bad trade. The instrument you're trading, the currency pair you're trading, knows nothing about you, owes you no loyalty. So if you take a buy and it's going for a sell and you realize that you are actually wrong and it's going against you, there's no need for you to feel it will actually come back to your entry price, because it knows nothing about where you took the trade. It has nothing to do with you. So a bad trade is a bad trade. So if you feel the market is going south and it's not going in the direction, just listen to that particular sixth sense and then just come out of that particular trading position. One thing I've realized with so many traders, so many retail traders, so many beginners, sometimes even experienced traders, we are actually able to hold trades in drawdowns more than we are actually able to hold profits because of hope. We actually have hope that the market will return and go back in our direction. But if we are in profit, we are not able to hold because we are scared that profit will actually reverse and then end up being a loss. So now we actually hold losses and then we always come out of winning trades. I wanted to actually switch this and now start to hold more winning trades and then come out of losing trades when you spot them, because like I said, a bad trade is a bad trade. So I have so many exit strategies I actually use anytime I'm in a trade and I realize it's going to go against me. The main thing I like to look at is chart patterns, and I also like to look at break and retest. So let's say I'm on this GBP USD trade here. What exactly happened here this morning? So basically I was waiting for the market to now get here, so I take a sell. For my risk reward was somewhere here. With market ended up being a strong breakout. Me having a breakout here simply means that I no longer expect to take my sell here. So if I was already in a sell here and it reversed and it ended up giving me this breakout I had here, it is a bad trade. So I'm supposed to come out of this particular trade. So I look at breakouts when I'm trying to catch reversals at key levels. If a breakout happened at exactly where I took my reversal trade, what happens is now I see that as a bad trade, so I just come out of it. So another way you can actually come out of a bad trade is also trying to find a trade to go in the opposite direction. The reason I'll be able to take a trade in the opposite direction over here is because I clearly see a strong breakout candle and I'm expecting the market to continue buying. So now I simply come out of the sell I had in here, take my small losses, and I just easily jump in on buys because I'm now seeing clear confirmations for buys. This is what exactly I mean. And then sometimes you can also double down on your second positions. When I say doubling down on your second position, let's say I take a first trade, my lot size is one lot, it's going in my favor, it reverses and I start seeing strong drawdowns, and I realize that it's actually still gonna buy. What I do is the one lot I used to take the first initial position, my second position, it is 2 lots. So the moment the trade gets to my entry price, I now close both positions and I make profits. The other one closes at break even, then I make double the profits I was actually initially going to make from the previous position. And the next thing you also want to do is also stay away from demo accounts. One thing you should also always understand is stay away from demo accounts. What do I mean by staying away from demo accounts? So many times you take a Forex class and they tell you to practice this strategy on a demo account for 4 months, 3 months, 5 months. Believe me, that is not going to help you in any way. The only time you should actually engage in trading a demo account is when you are trying to practice how to take trades or how to manage your trades. So basically how you take your buys, how you take your sells, how you enter the lot sizes, how you basically set your stop loss, your take profits, how you set your pending order, whether I buy a stop, a sell stop, I buy a limit, a stop limit. All these keys, how you actually manage your trades, how you take partial profits, how you close some of your trades, how you close all your trades. This is what you need a demo account for. You don't need a demo account to practice your strategy because there are no emotions in play, because you know it is not real money. Your brain knows it is not real money. Your heart also knows it is not real money. So once you know it is not real money, what do you think will happen? If you take any trade and it's going into any drawdown, you can actually hold that trade for weeks. So you don't really care whether you lose on that particular account or not. That is why I do not actually recommend you trading a demo account. Always start straight with your live account. Once you understand how to take your trades and manage them, start with the live account, but just start small. You can start with $10, $20. If there are no emotions in play, means that you also know what's prone to making any mistakes because you know it is not real money. So demo accounts, I do not recommend for you. Only use them when you are trying to know how to take trades, how to manage trades, how to employ all the skills, all the trade management skills, all the risk management skills. If you want to understand all that, then fine, you can use the demo account to practice those concepts. But if you want to take your trades and make money from them, do not use your demo account because it is not the same thing. Basically, it's not the same thing. Then the final one I want to leave you guys with is not just be a trader. Your whole life should not be about Forex trading. Everything about you should not be about Forex trading. When you wake up in the morning, the first thing you should do is not jump to the charts. The last thing you should also do is not be by the charts. You should not be by the charts 24/7. Because the reason why you're actually trading Forex, it's not only about the financial freedom, the time freedom is also very important. You want to have time for yourself. You want to own your 24 hours. And if all you are doing is trading, you do not own your 24 hours. You cannot say you don't want to work 9 to 5 and then come and start trading forex and then you are sitting by the chat 24/7. Have extracurricular activities, you know, certain sports and adventures you want to do, certain movies you want to watch, travel. In my estate, there's a basketball court right across me, there's a tennis court, there's also a golf course around me. I also have a game console where I can also play games. I also like to watch movies a lot. I also like to listen to music. I also like to travel. So we realize that there are so many things I do that help me take my mind off, you know, the stress that trading brings me. It also helps me release steam. It also what keeps me relaxed. So you also want to inculcate all of this in your trading. Have certain things you do that takes your mind off trading if things are getting stressful, because everyone eventually meets a slump. When you meet a slump, what do? If all you do is trading, you realize that you are incredibly stressed out. You are not able to relax and then bounce back from whatever losses, whatever huge losses you might actually suffer when you are in a slump, because basically it is possible to bounce back from a slump. So these are the 5 basic rules, the 5 most important rules you need when you are trying to strengthen your trading psychology. One thing I want you guys to know is that trading is not just about making profits. It is a journey marked by challenges, setbacks, and then triumphs. How you navigate through this complex landscape is how you attain success as a trader. So you want to inculcate all of these most important rules I've given you, because you need it very, very well to improve your trading psychology and then become a marksman, become an amazing trader. And before I leave, I want to leave you guys with a book that really helped me improve my trading psychology. Trading in the Zone by Mark Douglas. Trading in the Zone by Mark Douglas. Try and grab a copy for yourself. This book actually offers a practical framework for traders to overcome psychological barriers and then, you know, self-sabotage. This is actually the best trading psychology book you will have on the market. I'm going to actually leave a soft copy of this book in my Telegram community. So if you are here and you're not in my Telegram community, make sure you just use the link in the description to join this trading community. And also, I'm happy to announce that our June edition of the advanced mentorship class will be happening on the 28th, 29th, and then the 30th of this month as well, which is about 2 weeks from now. This class will take place on Zoom 4 p.m. GMT. So regardless of your geographical location, you are able to join this class. It is not a pre-recorded session. It's actually a live session on Zoom. And I'll be handling this class personally. So you get to ask me every single question, whatever experiences you want me to share, whatever concept you want to understand, my risk management criteria, my entry and then my exit criteria, all my trading techniques, my gold, scalping, and then day trading technique, every single tool you need to be an amazing and then a successful trader, you will be learning in this class. And it's going for just $120. For just $120, you get access to my lifetime mentorship group. You also get to learn directly from me, and I also get to be mentored by me. So simply use the link in the description to sign up for this class, register, and then book your slot. If you are in my trading community, I'll leave my handle in there, so you're also able to use that to sign up for this class. If you find this video extremely helpful, I need you to like this video, share with as many retail traders you know as possible. If you made it to the end of this video, I also wanted to leave a comment. What did you learn from this video? Is there any other concept you want me to also teach in this particular video? Feel free to leave it in the comment section. Also, subscribe to this channel if you're new to this channel. If you are a returning subscriber, make sure you hit the notification bell so you get it every time I go live or anytime I drop a new video on YouTube. You can also keep up with me on my socials, Common Forex on all platforms, Instagram, X, Telegram, TikTok as well. Hit the link in the description to also sign up with my recommended broker with the best trading conditions, tightest spreads, instant deposits and withdrawals, as well as 24/7 customer service. As always, I'm Common Forex, and I hope I left you better than I found you. See you all in the next one. Bye.